And we're live. Thanks everyone for joining. Appreciate you guys, everyone being here. So live today with Dennis Bron from Roofstock. Very excited to chat through getting to hell yes, Dennis, especially given your background, 7+ years at McKinsey, and then in a bunch of different ventures-backed firms. So very exciting to hear. And again, oscillating roles between growth and operations. So I think there's a lot to share there, especially when you're talking about getting to hell yes. Remind everybody today, we talk about getting to hell yes. We talk about, the shift in the buyer's journey, moving from where sellers were kind of in a world of persuasion into a world where we're really trying to find fit. And what's that fit look like? How does it feel? How do you be different? And how do you begin to kind of like bring that buyer through the buyer's journey? Because ultimately, the thesis is that we're moving from a world where we're persuading and, like talking to people and really becoming more problem solvers and solution fit. And that's a different shift. And especially in a world where in multifamily and in single family, where you've seen the economics of the business change quite a bit in the last 24 months. And that has changed a little bit of the buyer's priorities. So kick it off right. Dennis, thanks for joining us today. Quick intro about your background. How'd you end up in this role? And then what's a problem you solve? Who's your hell yes buyer?
Awesome. So I'm Dennis Bron. I joined a company called Mind Property Management, Mind.co, about just over 4 years ago. I was at Better.com, online mortgage company before that, for some of the fastest part of their growth trajectory, and then at Shift.com, another kind of tech-enabled operations company that tried to do kind of what Carvana did, and unfortunately didn't make it. So I went public through a SPAC and didn't make it. So it's interesting. It's been an interesting journey, and there's a lot of parallels between these businesses. When I went to property management, I was already working in real estate for a while, but both the mortgage business and the real estate brokers that I worked with and the online used car business, they were all super cyclical, and you had to start every month from zero revenue. Mm-hmm. And so the idea to join a business with recurring revenue was really appealing to me. Especially at that time, I knew the mortgage refinance boom that had been very intense and very good for us business wise. Like I knew that wouldn't last forever. And this property management business seemed great because it was counter-cyclical. Now, it's not as counter-cyclical as I had originally thought, because when rates go up from 0 to 5 to over 5%, like a lot of things start to get a little bit more challenging in real estate. And so it's been an interesting journey, sort of reacting, waiting for rates to come back down. And I think now we're all slowly starting to learn that that might still take a little longer or never happen. And we're starting to adjust to that world. And so the last 4 years it's been a world of change. We went from an industry that was growing super fast, where lots of investors were buying investment properties and looking for property management for the first time, to a world where investors are generally net sellers. The market is shrinking, and we're just competing for kind of like a smaller group of people that are looking for very different things. Like rent growth has definitely like slowed down. It was probably like 10-20% at times, the peak of COVID, and now that's like definitely low single digits. And that means the bar for operations and every other aspect of what we do is going up.
Definitely. It's the consensus. It's interesting to look at like kind of the big events, right? So look at like the big kind of conferences, an example, and the topics. Topics are more operationally focused, but you're also seeing now like conferences that are only 3 years old, that are dedicated just to operations in property management. Yeah. So not only is the content and the bigger ponds reflecting operating models, but you're seeing you're seeing entire like groups of people trying to connect, talk even in a deeper dive on how operations works.
Yeah, and I think that landscape is changing quite a bit. There was a lot of attention on sort of like fraud prevention and illegal occupants for a while, and I think the industry sort of like came together and made a lot of progress uh, on that over the last sort of 12 to 18 months, and now there are kind of like other areas to solve. And I think maintenance is still like probably one of the biggest problems in single family that we need to address, where maintenance costs are structurally higher than in multifamily, and there's lots of opportunities to streamline that and make it efficient. So
Yeah. So when we take a look at the Hell Yes side of things, just share with everybody about Roofstock, the relationship with mine and the other different companies, and just the whole portfolio. And let's get into what's a problem that, I mean, Roofstock sells, you sell, you solve, or however you want to kind of address that with a different kind of group of companies.
Yeah, I would say Roofstock and Mind were started by Gary Beasley and Doug Bryan, who had merged their companies before and taken them public very successfully, and then both kind of left Invitation Homes as their company merged into Invitation Homes, and they started out with a very similar vision, but started with a very similar, started from a very different point. So Gary at Roofstock really focused on the transaction side. Doug and with Colin and Ali, his co-founders, like really focused on the property management side, and started to build a property management system from scratch, because they had experienced the difficulties in scaling with the solutions that were out there for single family. And Roofstock had acquired a couple of different property management companies before. Mine was the third one, but also the biggest and the most advanced one. And so we've fairly quickly after the merger consolidated all of the property management on the Mind platform, and mostly building around Roofstock's transaction capabilities. So Mind had started with property management, but would also build a transaction capability, completed like $1 billion worth of transactions, but never as much as Roofstock. And Roofstock had like a lot, like, and invested more and was a kind of a step ahead. So it was in that sense a very natural combination, and the fact that the leadership knew each other and the teams were very similar. Like our offices were steps away from each other, so it's been like an incredible marriage since then.
So when you take a look at like what's a better place to start at with respect to like the sales motion? Like you're ops now at Roofstock, you're at ops and business performance and growth. Where do you want to kind of dig in on?
So I think what's interesting is both companies serve like retail and institutional customers. So part of the original vision was all about serving individual investors and bringing some of what they had learned in sort of SFR REITs to individual investors, of whom there are millions who own millions and millions of homes, and it's the biggest single asset class in the world. But also one of the most fragmented, with a very fragmented landscape of service providers. And so 99% of our customers are individual investors, like retail customers, but we also serve some of the largest institutional investors in the country.
So when you guys go to market, from a well, let's split those up, because those are two different kind of buyers, right? The retail one versus the institutional.
Yeah, and I think I was brought in to really build the retail growth motion, but we have a couple of other folks who've really spent a lot of time kind of investing and learning in that space. And Roofstock had a lot of success in the retail marketplace side when capital was a little bit more freely available. Yeah. And there's a third company in the portfolio that's called Stessa, which is more of an accounting asset management solution for retail investors. Very popular, has like hundreds of thousands of investors on the platform and millions of homes. And we're still working to figure out exactly how we're going to combine all these assets and come up with a new approach to growth and a new approach to delivering services. yeah. So that, I think that's like probably the most interesting part. And our like the hell yes customer is, I think one of our former colleagues used to say, like, we try to deliver read performance in a retail world.
Mhm.
It was just hard. We set the bar high. We're trying to deliver really high quality, professional, reliable, consistent service, but do that to individual investors who might own 1 unit, might own 10 units, might own 100. I think we're pretty close to having some of the largest geographic coverage of
Mhm.
a player in the space. And so our hell yes customer, to your question, is someone who's looking for a professional service, who's
Yeah.
looking for sort of reliable professional service consistently across multiple markets. Yeah, that's what we try to deliver and deliver.
Because I gather, given your geographic scope, like if you're a retail investor, let's say you've got 5 homes in Cleveland, you might probably find someone just local that can manage that. But if you've got
Yeah,
a home,
you might find someone who does a really great job. And
yeah.
the way I kind of like the way I see this industry evolving is a little bit like the banking landscape. So
Mhm.
in the banking landscape, there are 4 or 5 large institutions who basically build all that technology in-house.
Mhm.
And then there's a long tail of small credit unions who run on
Yeah.
Fiserv or third-party software. And we try to be one of those 4 or 5 big players. There's a couple of other players out there that do a lot of tech development in-house.
Yeah.
And some of them have more skill than we do even. But yeah, like that's basically we're trying to build a Chase bank from scratch in 10 years, and we're building this plane while we're flying it. So that's kind of what makes us unique. Is we build our own accounting software, we build all of our workflows, we build our own AI chat bots that integrate with our self-touring experience and ID verification and screening technology, and that allows us to do things that are harder to do when you're using kind of best of breed third-party solutions.
Yeah.
But there's also a place in this space for those. Like they're a
And for
small
everyone listening,
the local property manager in Cleveland operating on third-party software is not going to go away.
right? What I'm finding is like the more SFRs I speak to, and for everyone listening, like you guys focus principally, like with the invitation homes background and the SFR focus, like I'm finding more SFR, like I'll say the you're talking about the big fives, like in multifamily, they're all running off of the kind of COTS, common the commercial off the shelf software. A
Mhm.
mix, it's not pretty. Like there's lots of kind of moving parts, but they're all in those commercial off the shelf stuff. But in SFR, more and more I'm seeing that there's like an emerging group of challengers like you guys that are all building their own software. So why is SFR? I mean, what's your rationale for building your own software in SFR versus using some of the commercial software that's available?
So it's a good question. I think
I've
it's just
seen it in 3 companies, three that are at least serving in 40,000 units
Mhm.
that are building their own software.
Yeah, and I think that just a commercial off the shelf software that works flawlessly, institutional grade, SOC compliance, etc. For 40,000 40,000 properties
Yeah.
across multiple states and geographies, like that just like doesn't exist. So even if you're building around existing third-party solution, you're still going to have to use a lot of band-aids and tech
Yeah.
development to just get that to work the way you need to.
Is that because they're all
Yeah,
built for like,
this industry is still pretty nascent. Like um, uh, if 15 years ago, it was basically non-existent, and it has gone through a couple of waves. It's still, I think, there's a lot of debate about how far the institutionalization of SFR is gonna go. Personally, like I know we have a huge housing shortage, and we're going to need capital to build enough houses, and I can't see I find it hard to imagine a world where institutional capital is not a part of that solution. So I think that's it would be in everyone's interest if that continues to grow. But that still requires a lot of maturation of the solutions that are out there.
Interesting. Yeah, I share your opinion. Like, I think that with the affordability situation and the shortage situation, the really only, like, I mean, the only thing that's clear to me, and I'll say it's also it's a lucrative market for bankable returns. Like, all of the money that used to be in office has to go somewhere else, or is going to find somewhere that's more reliable, right? You're looking at, what, 35%, I don't know. I don't know the number is. It's high. It depends on the city you're in. But it's like, it can be pretty bad vacancy rates in office. And like, you see it in both cities trying to figure out their property tax structure, in office in terms of like their vacancy rates. So the money's going to go somewhere. And it seems pretty logical that if you're chasing that kind of like low beta, like you said, counter-cyclical investments, they're going to fit in a really nice place in residential rental. And and there's just not enough personal for money out there to go buy, or at least my opinion. I'll say my opinion because this is totally unresearched. My opinion is that there's not enough people that can afford the homes at the full price. And so you go back to like the invention of GMAC, and credit facilities that were built up to make cars affordable. And it really came down to like the invention of the lease, and the lease changed car ownership, right? Which is, your second highest purchase in people's typical in a household. So you take a look at those things, and it just makes good sense. Like, I mean, people don't wring their hands over the fact that they're leasing or if they own their vehicle. And I do think that the American dream of home ownership might be like just shine might be coming off the marketing a little bit, because you do want to be able to afford a home and live in a home versus be completely house poor. And so the ability to do all of that is made available by institutional capital in SFR, et cetera.
Yeah, and I think I'm European. I'm Dutch, and in the Netherlands has a very high home ownership rate. I used to own a home in the Netherlands too. It's higher than the U.S. even, but Germany and Switzerland have home ownership rates in the 30 and 40%. And standards of living in Switzerland are perfectly high, and people can be very affluent and happy and healthy when they rent a home in Switzerland. And I think that's possible too. And I think like public policy has been overly focused on home ownership as the only solution. And I think like globally, the trend is moving away from that. So yeah, I think there's a lot of opportunity. The parallel between car leasing and buying cars is an interesting one, because that's also one that leasing keeps going through these cycles, and sometimes it's very attractive, sometimes it isn't. It depends on the quality and lifetime of cars, and the sort of like the residual value, which is always kind of like hard to predict. So like it's a bit the same. It's like it's hard to know. Sometimes it makes more sense to buy, sometimes it makes more sense to rent, and it will always keep going through these cycles. And I think the advantage of single family over multifamily is that as an investor, you can always sell to a homeowner if and that liquidity, it's one of the most liquid assets. You can't flip it for cash like instantly, but there's always going to be demand. There's always going to be buyers. And so it's almost as good as cash if you can wait.
Well, I mean, and I guess the flip side of a home versus a vehicle, just to kind of play the metaphor out for 30 more seconds, is that the home appreciates and the vehicle depreciates, right? So the residual value on a vehicle has a negative effect on the payment, on the payment math, right?
Yeah, you can still depreciate it for tax reasons.
So okay, so that's more math than people probably expected today. But yeah, no, all those things are correct. So when we get back into the hell
The big
yes,
difference is it's a little less mobile. So you can't buy a home in Florida and sell it in California. That works a little bit easier with cars.
yeah, you are regionally bound by the markets. So then when you guys go to your customers, so let's talk about the retail side, for example. So that's someone who's looking for geographic, they want to solve their problem in managing their portfolio of homes. They may be, clustered. So what's the average from a retail side of things? How many properties is the average retail owner, the retail customer, your retail customer?
About two homes. So a little less than 2 properties, because there's a lot of duplexes and fourplexes and some smaller family buildings. But yeah, like that average is about 2, and I think that's also true with what some of our competitors are seeing.
So how does that go-to-market motion feel compared to the institutional go-to-market motion?
I mean, it's very different, much higher volume. A lot of people are just like searching for local property managers, right? And doing their research. I think some of those patterns are going to change, and we're definitely seeing some search patterns change in response to AI. So like the Google has pretty significantly changed their search results page, and they're gonna like for a lot of search queries, they're just gonna give you a straight up answer. But I think we're seeing the first signals that people are starting to search for these things differently. Like you can ask Google or ChatGPT or Claude for how to find the best property manager for your specific situation, and it's going to give you a lot of very detailed advice, and you might see more and more people go about it that way. But obviously word of mouth is still big too, and there's lots of local meetups and forums where people kind of discuss, and so we get a good amount of our new customers come from referrals as well.
Does that feel like a B2C motion?
Yeah, it's very B2C, although I would say if I compare it to buying a used car or signing up for a mortgage, it's a little bit more of an involved sales process. So people regularly ask us for references. They ask questions. Some of them, especially if they're a bit more sophisticated, might have a lawyer look through the PMA, and you don't really see that when people are buying a car or refinancing a mortgage. Like a refinancing a performing mortgage is pretty standard, and they care mostly about rates. They're very easy to compare. It's like kind of hard to compare property managers. Like we're basically selling trust. So that process and those interactions are pretty critical as well.
The interesting side, just side note on the GPT thing, just yesterday, I had to refresh my Chrome browser, and I was in GPT, and I was prompted if I wanted to have GPT as my default search engine, which I thought was kind of an interesting.
I don't know if you've around with like Perplexity, and they're getting better and better. I definitely am starting to shift a lot of my searches away from Google. I don't think you're really seeing that yet en masse, but the early adopters are definitely shifting. And why? It's cheap or it's free. In most cases,
it's hard from an ad perspective. Like B2C is going to change, right? Because like from an ad, banners and clicks and search ranking, like the, I don't know what the search ranking, how it's driven in GPT.
I also think it's getting back to maintenance. It's amazing what you can do as a non-expert with a little bit of help. Like there are a lot of things you could do with YouTube, but I remember making some repairs in my apartment here and just uploading pictures to ChatGPT saying, this thing doesn't work, how do I fix it? And it will literally give you really good instructions, even tell you where to buy the parts and how to look up the installation instructions. It's it makes people experts in things that they didn't know anything about 5 minutes earlier.
I mean, it's very the ability to self-serve is amplified. There's no doubt about it. I mean, you follow
Yeah.
some of the like, we've got customers in the contact center space, and you follow. So then obviously you get kind of feeds from them and what they're kind of following, and they operate at a higher volume and a higher rate, and the GPT influence on how that particular vertical is changing is happening radically fast. And what I find interesting let's bring that to multifamily or single family, is that the centralization conversation is borrowing a lot from the contact center world. And so you're going to see this like collision of, historically lagging industry, like literally colliding with an early adopter technology that's being adopted. As it's almost like you're not using an AI agent in contact center, you're behind. Like you're not just like, you're already behind. Like this is beyond the early adopters, beyond the early majority. You're a laggard, and you should be competing on something other than operational excellence, right? And so it's in a world of centralization conversation that includes an element of contact center. You'd be remiss to not honor what's happening in the contact center on a kind of on the weekly basis, to understand that's where the puck is going to go in multifamily and single family.
Yeah, and I think the key is to do it in a way where you deliver a superior customer experience. Like that, it's very possible, but not all of the solutions out there today do it. There are a lot of sort of AI-based solutions in real estate, and they definitely, some of them are overly focused on generating efficiencies at the expense of the customer experience, but it's definitely possible to deliver a better customer experience.
What we look at is the reality that kind of some of these solutions, like let's say the digital-based solutions, like you see it in travel or financial or healthcare, they're all dealing with one-dimensional data, right? But in real estate, it's three-dimensional context.
What do you mean with that?
Well, I mean, like it's things that are broken, right? Versus like I'm trying to rebook my plane ticket, which is kind of one-dimensional.
Yeah.
I need my bank balance. When's my appointment or whatever, right? What's my billing? I mean, you go to contact center conferences, 2/3 of the attendees are in financial, insurance, or health. Those are the top three that dominate, right? All the talk tracks, all the stuff. And so a lot of the contact center solutions are in technologies out there is geared towards solving those kinds of problems. And they're largely all data related problems. And so it's very easy to do a bot. Like the Expedia bot's amazing. Like to change your plane tickets, it's remarkably good. And
I mean, what I love about these solutions too is that they have infinite patience, and they're very good at sort of like deduplicating requests. Like anytime it's warm, someone's HVAC system is going to fail, and it's going to be very frustrating. And they're going to want to know, and they're going to want to have constant updates. They're going to want to know what's happening. But at the same time, having them call into a contact center and asking for constant updates keeps our team from actually solving the problem.
That's right.
And you see a lot of people kind of like get nervous and file the service request 10 times, and it would take our team a lot of time to like triage and dedupe all of them, and it would actually keep them away from solving the problem. And that is really dramatically changed with the advent of AI. The AI bot, like they're so nice and they're so patient. They can't solve everything, but they can definitely like create a better experience for people in those help create a better experience for people in those situations, and keep our team focused on solving the actual problem.
So when you guys are looking at your customers, like kind of bring it back to hell yes, like so there's a lot of, like you mentioned, there's a lot of property managers out there.
Yep.
It's a competitive industry, which I think it's, to your point, there's opportunities to differentiate amongst what's out there. And when you think about Mind's differentiation, how do you guys differentiate for your specific target buyer?
what makes us most unique is the fact that we built our own system from scratch.
Mhm.
So you can have more insight into what's happening more easily in your app. You can do a lot more things like with technology than most of our competitors support.
Mhm.
And we're still building this plane while we're flying it.
Yeah.
So we keep releasing new features and new capabilities over time. So if that appeals to people, then they should check us out. That doesn't appeal to everyone, right? Like you can call our property managers. Like we make that very available, and it's easy to
Mhm.
interact with. But some of our, they're if you just want to have someone who lives close by and you have their cell phone number and they send you a spreadsheet at the end of the year, that's a different kind of service. That I wouldn't say we don't deliver a personal service, but our uniqueness is in the technology that underpins it all.
It's data. You get your people are augmented with data.
Yeah, exactly.
Just,
And we are on the side of transparency. Like for our institutional customers, we share something like 500 plus real-time data point. That is hard to get out of any other system.
Mhm. Well, I imagine that like in the SFR world where each property is unique, like it's the value associated to the data becomes that much more important because each property is unique. Like if every single property was exactly the same.
What I think is very different in SFR versus MFR, that you're making much smaller and more frequent transactions. So if you buy a 500 unit apartment building, you're going to sit on that for like a decade or so. And if you made a mistake in underwriting, you're going to have to live with it until you have a chance to exit, right? If you're buying 500 single family homes, you're buying them one at a time. It's going to take you a while to accumulate it. You're going to have a lot of learnings and opportunity to refine your underwriting over time. You also have a lot of opportunity to prune your portfolio, sell some homes that have appreciated or were a bad fit, and constantly sort of like iterate. So the value of that granular data to refine your underwriting and make decisions and what to do with every individual asset is much higher. So there's a lot more data, and it's much more valuable than in other types of real estate.
That makes a lot. That sounds like a loud and clear, like obvious thing. Like when we take a look at the like, and what's interesting, I'll say what's interesting is that we were at the SFR conference in Phoenix for Christmas, and having the conversations around the BTR side of things, which is kind of like it eliminates a little bit of that agility that you're talking about that is natural and native SFR. And so having to kind of figure out that transition, what that feels like, where you've got now blocks of SFRs that are all contiguous, that creates, an asset that is larger than the single family. So you can just like flip and change individual properties. You've got it. It's the entire community that you're looking to exit on.
Well, there's different ways to do BTR too. If you have you can have multi-plat, single plat. So there's some built-to-rent investors who were working on a pipeline to build 1,000 units, but they deliver them 10 or 50 at a time, and so they can actually they're also like super focused on all the granular data they can get from those first communities, because it will influence the floor plans and the designs and the way they lay out future communities. And then it's sort of like, especially if you have a multi-plat where you can also sell them off and create mixed like rent own communities over time, then that data again becomes very valuable, and it looks a lot like SFR. But there are definitely developments that are bigger single plat where it looks a lot more like MFR, and so there's a wide spectrum in BTR.
Do your institutional customers, like who's driving the bus? Like, is it from a product perspective? So to give you guys credit on flying the plane while you're doing it, I really believe in technology. That's the only way to do it. Like, you can't go and incubate an idea and then reveal it to the marketplace and then hope that they buy it. It just doesn't work that way. And so, like, the iterations of building the plane while you fly it is actually pursuit of product market fit.
Yeah.
You go and incubate and then reveal, like, that's not that rarely achieves product market fit, because you're not as smart as the masses. Like, very few people on the planet are. And so, like, that's the right way of doing it from a capital allocation and building the right thing. Really building, you only have so much time on earth, so build the right things. That's, who is the one that you rely on for the most amount of influence for that product market, the roadmap? Is it the institutional investors or is it the retail investors?
It's definitely a mix of both, and obviously wherever we can build things that benefit both groups is likely to get prioritized, because we have the most benefits. But we have teams working on both and constantly iterating, and there are things that we do for institutional customers that we sort of use as inspiration for the retail experience, and vice versa. So yeah, definitely we're definitely sort of like evolving both at the same time. And I think I always say that, like, for product management, like, it's all never hard to figure out the vision for the future shiny thing that you want to build.
Yeah.
The hard part is what to build first, how to chop
for sure.
into little pieces where you get 80% of the value with 20% of the functionality delivered. And that, like, and get quick learning that allow you to iterate and learn. And I have to give a lot of credit to kind of the early minders for standing up a platform that allowed us to fly pretty early on. I think we started flying in like year 1 or year 2. And we're still not done building the plane, but we're getting there. Like, yeah. But that is really hard to do.
Yeah. So then, if you take a look, so I mean, maybe for everyone to listen, like, maybe the like, to your point earlier about accumulating an SFR portfolio, you don't accumulate. Very rarely do you accumulate a big block of units, or I'll say not a block, but a portfolio of units, portfolio properties all at once. It takes some time. So given that it takes some time, when you start with one, you've got something that you're running it, and then you end up with a system that you're trying to run. Maybe you get to like 10 or 15. At what point do people realize that they need to, like, get off the Google Sheet and the Excel and the local, and realize they've got to get into more of a professionally managed?
I think that depends a lot on their personal appetite, abilities. I'd say there are a few different types of investors, right? You have the person who loves to do the numbers people. You have the people who are like deal makers, and you have people who are great at construction projects and maintenance, like the handy people, and they have a different journey. Like, there are people who buy fixer uppers and start managing them, and they might struggle to actually get a lease, and they might need help there. Yeah, it depends on people's skill set, where they're tapped out. Like, when I've heard people with full-time jobs self-managing 50 homes, I don't think many people would be able to do that.
Yeah.
I probably would not have the appetite.
Yeah.
But some people make it work. I think it's very personal. But yeah, there are plenty of people who just have one property and have a property manager to enjoy that freedom that gives them, and the peace of mind.
So then on the institutional side, is that kind of more of a B2? It sounds like that's more of a B2B motion. How do you guys find the people in the institutional side that need to that should consider in mind?
I mean, I think at this point at Roofstock, we have relationships with, like it's still a fairly small space where you go to a few conferences, you kind of know everyone, and we also have a lot of data on the space, so we have pretty good insight into who's who.
And what people might not know is that, even the biggest in the market doesn't manage all their own properties.
That's probably true.
Right. Like, I mean, that's what I found interesting is that, like, even because of the scattered site problem is persistent no matter how big you are. And
Yeah.
so if you guys have depth in a specific geographic area, and I'm a big SFR with 100,000 properties.
I think it's also true is that I think everyone in this space was planning for more skill in 2021 than they have in 2025. So there are a lot of players that look at start with third-party management, plan to internalize. Some of them did internalize, but like no one planned for this.
Yeah,
I don't think you would have gotten into no one planned for 2025 the world the way we find it. Like there are a lot of surprising things that happened over the last few years, and I think people are still figuring out how to deal with that change in the economic environment.
So and you no one plan for the cost of capital.
Yeah, I think that's the biggest change.
Yeah, I would say
it's not just the cost of capital you alluded to, like what happened in the office space, right? So like there are a lot of real estate investors with mixed portfolios who have to refinance some of their offices, and they might have to actually put cash down on that. There's a lot of complicated dynamics. Like overall money supply has come in quite a bit. I think it's like more or less flat. The Fed is still shrinking their balance sheet at a pretty rapid clip. And then this summer is going to be interesting from sort of like a monetary economics perspective. We're going to first, like, I think we're hitting the debt limit now, which has a very interesting impact. I learned I didn't realize this until last year, but the Fed or the Treasury parks all of its cash with the Fed. And when you hit the debt limit, they're no longer issuing bonds and collecting cash. They're draining their bank account, and the folks who would normally buy those bonds, like their bank account balances are going up because they're not buying bonds. So It's actually like essentially creates some quantitative easing and adds cash to the rest of the economy in the banking system. But then that reverses the moment Treasury starts issuing bonds again. I think like a couple of days ago, the Fed officially said there's still abundant reserves, but we're expecting that looks different by the summer, and so we'll see what happens.
And I guess it's an interesting thing is that it really does come down to just the asset itself, the property itself it's an agile, it's got more liquidity to it than the block, right? Than a multifamily block. And so things like interest rates, things like they're all individually held with each property. Like you don't have a mortgage for 10 homes, you get a mortgage for each individual home. So all of it's, what I was kind of thinking about is like insurance example. Insurance is also quadrupled in the last 3-4 years, right? But in single family, it might not have the same effect as in multifamily because you can kind of you can load up in Cleveland and that won't have the same exposure as something that's sitting in a more hot insurance zone like Florida or California, right?
Yeah, that's right. That's been pretty local, and there are some areas where insurance costs haven't risen as much as in other areas.
So that makes that asset class much more, I'll say, much less vulnerable to to some of the big cost increases that have occurred in other asset classes.
Yeah, but I think what happens in the overall economy is very hard to predict. Like and it's not just the federal funds going from 0 to 5% and going back down to 4. There are much more complicated dynamics at play that drive whether people can get a mortgage, yes or no, and at what cost. We've never lived in a world where the Fed has a $7 trillion balance sheet that's shrinking at a $1.5 trillion a year. That this is new. No one has a textbook that explains what happens in that scenario.
Yeah. Well, I mean, I often we look back at like conversations I've had. You look back at the relative balance sheet compared to GDP in like the 1980s, like the early 1980s, when inflation was high, and like I mean, Dow was like at like 500 points. Like it was like small relative to where we are today. But there's a lot of plays that are really like if you were to kind of argue that equities volume is not where it used to be in like let's say from 2001 to 2020. And if you look back at like the expansion of the economy from 1960 to 1980, look at 2000 to 2020, and then look at the debt curve that expanded from 1980 to early to mid 90s, there's an argument that could be said that maybe we're kind of moving into that kind of curve as well. And so that's why you're going to see that basis points that are available for banks to make money on the points, because they weren't making as much money at like 1%, but now you're sitting around a nice little healthy 4. So there's movement around that from a profitability perspective. And so I'm eager to see how it all unfolds, because if you're a history fan, you love it when history repeats itself because you just prove yourself right. But it'd be just kind of interesting to see if we see that similar curve that happened in the early 80s to where we are today. I mean, you've got a lot of commonalities, right? You've got the exit of a Democratic one-term president. You've got an entering of a really commercially friendly Republican. All these things, it just looks very similar to like to the early 80s, right? You've got an elect. Anyways, without getting into too much around politics, like I'll be curious to watch and see how it all plays out, because it feels very similar to how things looked back then.
Yeah, I think what's different is that we went through a lot of financialization of the economy in the 80s, and I don't necessarily know that we're going to see a lot of that in the next few years. Like the financial service sector is like bigger as a percent of the economy than it has been in a long time, and there's a limit. It's never going to be 80% of the economy. Well, yeah. So it's going to look different than the 80s in many ways.
That is a good point. Like the percent of the economy that was largely manufacturing and agricultural based in the 80s, like I think it was approaching like 3/4, right? And now the service bases and technology bases is more 3/4, right? So I don't know. It's fun to speculate about the past and about the future, or fun to look at the past and speculate about the future, because there are some commonalities, but it's not entirely the same. You know? When you guys are out there looking around and you guys are and shopping, let's maybe focus a bit on the yes piece. Like as you guys are kind of coming to close, what objections do you normally hear from somebody who's considering property management? So let's imagine a retail buyer with like 15 homes that are scattered and they're looking to go out there and they've got to choose from 3 or 4 different property managers. What do you guys typically hear as an objection?
That's a good question. I mean, we definitely have people asking us about how cost of maintenance, how we're not to exceeds, but also like asking for references is pretty common. Mm-hmm. I think, yeah, like that's it. It's like just the basic elements of our service. We talk a lot about our rent ready standards, make sure that people kind of buy into that. So like we try to have a very consistent standard, and And I think that's a big difference with other property managers that give the landlord or the owner a little bit more leeway in deciding like what sort of quality they're comfortable with and sort of their standards.
Yep. Because I guess not everybody needs. I mean, like to your point, it's a specific buyer that's looking to choose based on the data that's available. Like the data, the way that you guys are able to enhance their ownership experience, right? Making them more agile. If it's a buy and hold investor, maybe they're not the kind that would appeal to choosing mind. But it sounds like if you're an active investor with your SFR portfolio, you guys are a great choice because you're going to have the data to be able to actually decide what you want to pick and choose.
Yeah, and I think like again, we focus on delivering consistent professional service. And so if people have very personal needs, then we might not always be able to meet them as well as a local property manager with a few hundred and a smaller team. They're able to kind of make more accommodations. So it's kind of like a personal choice in the end, what fits best.
Cool. Well, I mean, kind of wrapping things up. So when you take a look at like your experience in all these industries, especially in your roles like growth in multiple venture-backed firms, and then pivoting to operations, so kind of like basically you get to eat your own dog food afterwards. Like, what piece of advice would you give people that are looking to find getting to hell yes?
Ooh, I would say I would break it down. I've heard people like customer acquisition always a little bit of a dance. So early on in the process, you want to pique people's interest. You want to keep it very simple. I sometimes believe that being a non-native English speaker is a bit of an advantage when you're looking at ad copy early in the funnel. Like people don't at that point, they're like just scrolling through their Facebook feed, and their mindset is somewhere completely different. So you have to keep it very simple and very to the point and just get them interested. And then there's like a little bit of a give and take as they get further through the process, where you want to give them a little bit more valuable information and get them kind of warmed up a bit more, keep building value in your service. It's been the way I think about sales is like there's really three phases. So like needs discovery, figuring out what someone needs, building value in the product that you're selling, and then there's the part to close. But you can't be focused on closing before you've explained what you're selling. And build. So
the always be closing axiom doesn't fly from your perspective, from your experience.
Yeah, exactly. There's a lot of courtship that should come before that.
Yeah, I definitely agree. I think that in our experience, especially kind of bringing in a new way of doing things, like it's something that you definitely have to understand that the problem they're trying to solve, because you can misplace a solution. And like we're in the ARR business, like the recurring revenue business, and if you kind of go backwards on recurring revenue, it's because you're solving the wrong problem for people. And that's never feeling good. That doesn't feel very good, right? It feels good. It doesn't feel good on both sides. And so I would agree with you in that keeping the message simple, solve what you're best in the world at first, and then radiate outwards and change and have that reflected in your messaging. So you're not trying to like complicate the choices they've got to make. And then definitely like listen first, right? And understand what they're trying to solve for. So be simple, ask direct questions, and match it out.
Yeah, and I think the other part is like you either have to know your audience very intimately and be laser focused on a pretty narrow segment that looks pretty uniform, or you have to have a sales process or marketing messaging and materials that are somewhat adaptive, where people choose a little bit of their own adventure,
Mhm.
where you can respond to their needs, their way of decision making, their objections, in a way that sort of appeals to that individual.
Mhm.
I remember early on when I started to take over growth at the used car company. I got a lot of advice. You have to like do segmentation, and I like kept like poring over the data, and I could not come up with segments that made sense. It was like what I realized is that there are lots of people who look at sports cars, and some of them buy sports cars and some of them buy minivans, but and so it was like really hard to figure out. It was like when someone's looking at a sports car, is this the minivan buyer or the sports car buyer? The only thing
Right.
that was like pretty persistent is like if they were looking at blue sports cars, they were more likely to buy a blue minivan. But it was very hard to like figure out like to cluster people based on their preferences, because like they might just be shopping, like looking at sports cars for fun on the way to buying it.
Yeah.
Buying a minivan. And so like what I realized pretty quickly is that the perfect segment size is one, and it's better if you can personalize than if you can create marketing segments. And the other learning I had was like it's much better to infer people's behaviors from the data than to try to rationalize it. Like we had these recommendations that were based on rules that we thought made rational sense. Turns out people don't behave very rationally, and if you just say like, oh, people who looked at these blue sports cars, they also looked at this blue minivan, you're getting a lot. We saw a lot more success. So definitely like learn from the data. And I think the perfect segment is one. Like whenever you can personalize things, it's always better than to try to create something that's cookie cutter.
Yeah. Oh, fair. That's cool. Yeah. Thank you for that. Wrapping the thing up. So how can everyone get a hold of you if they want to chat about what you guys, well, specifically around the property management pieces, but then anything else that you're working on? What's the best way?
Yeah, just like ping me on LinkedIn. I think that would be a good one. I usually
perfect. Who should we talk to next? Who in your network should we try and chase down? On the show?
Let me think about that. I'll send you some suggestions.
All right, perfect. And for everyone in the audience, thanks for tuning in. Appreciate everyone's just being there for us. Listen to us on Apple, on Spotify. This will also be available on LinkedIn. And if you do listen to the podcast, subscribe and follow. It makes a big, huge difference for all the rankings. I appreciate everybody for listening in today. This was a lot of fun. Thanks a lot, Dennis. And good luck with everything this year. We love the fact that you guys are working on the data side of things for property management, because it definitely, it's a gap. And you hear it just over and over and over again that, there's in the maintenance piece of the world, they're unempowered because they don't have the data. And so that differentiation point from an asset ownership perspective, from an operations perspective, it's something that is just so critical to shore that up. So I guess congratulations on your team for observing that very early on. And thank you from everybody in this world for actually being focused on that and being a differentiator, because it's so heavily needed. Thank you everyone for listening. Have an excellent day, and we'll chat soon.
All right.
Take care. All right. Bye-bye. That was good.